Hey, quick question. Are you overwhelmed with the amount of legal jargon and confusing narratives surrounding passive commercial real estate investing? I was too for a really long time, and a lot of that surrounds the difference between 506C and 506B syndications. Well, we're going to clear that up today in a really short, quick video and give you all the information you need so that you can get into the right syndication for you. Hey everyone, my name is Lucas Miller, host of the Fear-Free Passive Investing Podcast, host of this YouTube channel, and I'm really excited that you're here because this channel is all about building passive wealth for you so that you can focus on what you want to do and less on this confusing narrative. We help busy professionals navigate this confusing world, so I'm really glad you're here. Now, we're going to get into the legal differences between 506B syndications and 506C syndications, but first, quick disclaimer, I am not a lawyer. We utilize securities attorneys and they have told me this information, so it's accurate to my best abilities, but it's subject to change, right? So make sure that you hit that subscribe button so that if anything does change, you'll know about it by watching one of my videos. All right, let's jump in and start talking about Rule 506. Now, the original Rule 506 pre-2013 said that the issuer of a security had a safe harbor exemption from registering with the SEC if it met certain circumstances. This means that the issuer of private securities doesn't need to obtain SEC approval or have a specific license before issuing a security, so long as it follows some strict guidelines. Now, fast forward to July of 2013, the SEC adopted Regulation D 506C, which is new. Now, Rule 506 was the original adoption, but Regulation D 506C was what they adopted now. Now, I know I am throwing a lot of alphabet soup at you, but just pay attention to the difference between 506B and C. That's really all you need to pay attention to. Now, under that new rule that they adopted, 506C, what that means is basically you could offer a security, a private placement, and have the ability to advertise that security widespread. You could put up a billboard, you could put up Facebook ads, anything. However, there were strict guidelines on what you could and couldn't do. However, the main difference is that when you are advertising under a 506C exemption, you have to make sure that you are only accepting accredited investors. Now, an accredited investor, if you don't know, is an individual or couple who has a net worth of $1 million or more without their primary residence being counted, or an individual whose annual income exceeds $200,000, or for a couple, $300,000, and a reasonable expectation that you will continue to receive that moving forward. Now back to 506C. So you can advertise to whoever you want. You don't have to have a pre-existing relationship with them. However, you need to make sure that they are accredited if they do invest in your deal. Now, how do you do that? The SEC now requires you to verify their accreditation status. And so if you are an accredited investor, all this means for you is that you're going to have to show proof that you are accredited if you're going into a 506C offering. Now, a lot of issuers of securities now are using third parties to verify all this information, which is essentially just sending some tax documents or getting a letter from your CPA. But if you're in that scenario, your sponsor should tell you what they need from you and tell you how to navigate that process. Now, let's talk about 506B, which is actually the original Rule 506. It never really changed, only that they added the B. Now, you can think of 506B as in buddies, meaning that's who you can raise money from. You can take an unlimited amount of accredited investors and up to 35 non-accredited sophisticated investors that you have a pre-existing relationship with. Now, what this means for you as a passive investor is that you needed to have a substantial pre-existing relationship with your sponsor before investing in their deal. Now, I've heard some say that this is somewhere between 80 and 95% of all real estate private offerings fall under 506B, just because of not having to verify accreditation status, not having to only accept accredited investors. You can accept non-accredited sophisticated investors, and it's just easier. Now, there's two questions that come from 506B offerings that you might be wondering. One is, how do I know if I'm sophisticated? And two, what is a substantive pre-existing relationship? Well, that's when it gets a little harder to talk about. You see, there's gray areas in the SEC rules that not even attorneys sometimes understand, but we have some rules of thumb that we can kind of go by. Now, sophisticated investors, according to the SEC, simply means you have enough experience in business matters and investments to evaluate the risks and merits of an investment. Now, as you can see, that's a very gray area, whether that means you've invested in a business before, whether you've invested in a single family house before, whether you've invested in a fix and flip, any number of things that could show that you are sophisticated and you understand the risks and the merits of this investment. Now, if you have any confusion on whether you qualify as sophisticated or not, my suggestion is to either reach out to someone that you know and trust that's doing this, or you can go ahead and reach out to me. My email is in the description down below. You can schedule a call with me. I've got some questions that I can ask you that will qualify you as an investor. But if you're not accredited, you definitely need to understand the merits and the risks of these investments. So it's really important that you get a good understanding of that. And that's really all you need to understand as a passive investor. 506B is, you can think of it as for your buddies, up to 35 non-accredited sophisticated investors with a pre-existing substantive relationship. You can't advertise, and it generally is 80 to 90% of the real estate offerings that you see. 506C can only take accredited investors. You can advertise. If you do see an advertisement for it, if you see a Facebook ad for it, you see a billboard for it, that's a telltale sign of a 506C offering. But you must verify your accreditation status with either the sponsor or a third-party verification company. Now, there are other offering types with the SEC as an exemption of having to register your security, but we're not going to get into those today. We'll do a video on those down the road, but just know there are other scenarios in which you could be raising money, so don't raise any red flags if you see something that might be contradictory to what I said just now. But like I said, these two exemption types encompass almost 99% of the offerings that you're going to see today in the commercial real estate investing sector. But like I said at the beginning of the video, this is subject to change. So make sure you hit that subscribe button. And while you're down there, hit that like button so you can stay up to date on the latest information surrounding private commercial real estate investing. Thank you so much for watching this video. If you found it helpful, share it with a friend. If you didn't find it helpful, go ahead and leave a comment down below and let me know what you think. I hope you all have a wonderful week, and I hope you're taking advantage of some opportunities that are out there right now in the real estate investing market. Let me know if I can help. Information to contact me is down in the description. Thank you, everyone. Talk to you soon.